All right. So reacting to a statement by IMF saying the economic policies in the country are too weak to boost the value of the naira, what's the way out of these?
No, I don't quite agree with the IMF on that. And we also need to be careful how we just allow the templates of IMF and World Bank to dictate the path or the trajectory of policy. We need to be extremely careful. Some of their policies are good, but some don't actually fit into our own context. So we need to be very discerning to know what will work here and what will not work. And we need to know how far some of their policies can go. Now, the IMF was talking about, excess liquidity, need to further tighten monetary policy, and so on and so forth. As we speak now, monetary policy rate is 18.75. How many countries have that level of interest rates in their economies? I know the implication of high interest rates for economic growth and for investment. Our CRR, which is cash reserve ratio, is 32.5. And what that means is that for every 100 million naira worth of deposit that goes into the banking system, 32.5 million is sterilized with the central bank. So you can only do business with the balance. The Nigerian CRR is one of the highest in the world. So how much more tightening do you want to do? I mean, the industrialists are crying, all the people who borrowed money from the banks are crying about high interest rates. The financial system is not able to support the growth sectors of the economy because interest rates are very high. So there's a limit to which we can continue to adopt the template of some of these Western institutions. So I think what is important, as far as this Forex is concerned.
All right. So, Dr. Yusuf, prices of goods have...
I've been talking about the challenges of all been doing a lot to tackle in terms of security and so on. No, go ahead.
All right. Prices of goods have increased recently. I would like to know, what's the impact of, what impact is the exchange rate having on this?
No, the impact is very profound. The economy is highly sensitive to developments in the foreign exchange market. In fact, there is a strong correlation between exchange rate movements and inflation, because the economy is also heavily dependent on a lot of imports, unfortunately, because it doesn't have to be so, but that is the reality. If you look at our manufacturing sector, a lot of their raw materials are imported, a lot of the equipment are imported. If you look at even some of our services sector, most of the equipment they use are also imported. And unfortunately for us, petroleum products which we are supposed to be refining locally are also being imported. And it accounts for almost 30% of our import bill. And generally for any energy, import energy dependent economy, for any economy that is importing energy products at this time, it's a lot of pressure for that economy. Unfortunately, we fall into that category because ideally, we should be benefiting a lot more from the high oil prices globally. But unfortunately, we have become a victim of high oil price because we have not governed our oil and gas sector properly. So a lot of pressure of demand is also coming from the oil and gas sector. So when you feed all of this into the price, because all of these people are going for foreign exchange. And the more you have a depreciation, the more it is costly for them to bring these things in, and these things feed through the general price level. So that is the connection or the nexus between the exchange rate and inflation.
All right. So because most of our approaches so far have been short-term, what long-term strategies will you suggest as the way out?
Well, the way out is what the government is doing. We need to stabilize the macroeconomic environment. And what I mean by macroeconomic environment is to ensure that we have stability in our exchange rate environment, which is part of the initiative that is on the table at the moment. We need to stabilize our inflation environment to ensure that we don't have very high inflation. We need to ensure that we manage our fiscal environment properly so that we are not running very high deficits. And some of the reforms that have taken place are also meant to address some of these macroeconomic conditions, because you need a stable macroeconomic conditions to inspire the confidence of investors, whether they are local or whether they are foreign, whether they are portfolio investors or they are foreign direct investors. You need that stable macroeconomic environment. And the government is working towards that, to stabilize the exchange rate and to also to ensure that there's reduction in inflation. The second very important point is to address investment climate issues. Because if you talk to entrepreneurs, apart from these macroeconomic issues, there are a whole lot of challenges they face in the investment environment. You know, challenges of infrastructure, of power, of cost of diesel, of high import duty, of the customs, of the ports, of all manner of non-state actors harassing businesses all over the place, and of insecurity. These are very serious investment climate issues that government needs to fix. And I'm hoping that they are doing something to fix a whole lot of these issues. So by the time you deal with the macroeconomic issues and we deal with the investment climate issues, you have investment growth. Because progress of an economy depends on how much you are able to attract investments. Not just foreign investment, even domestic investment. But it is from investment that you can create employment.
Dr. Yusuf, are you there? All right, I've been speaking.
Those are some of, to ensure that we have long-term stability.
All right, I've been speaking with the Chief Executive Officer of the Center for the Promotion of Private Enterprise, Dr. Yusuf. Dr. Yusuf, are you there?
Yes, I'm here.
All right. So let's quickly talk about the reliance of Nigeria on crude oil sales, which is another factor. How much of an impact is this having on the system presently? Dr. Yusuf, did you get my question?
Yes, I'm with you. Can you come again?
All right. I'm talking about the reliance of Nigeria on crude oil sales, which is another factor. So I'm asking, how much of an impact is this having on the system presently?
So crude oil sales is one of our low-hanging fruits, especially now that we are talking about crude oil at almost getting close to $85 per barrel. It's a low-hanging fruit for us. All the oil-producing countries now, they are smiling. Their reserves are overflowing. They are making a lot of their currencies are getting stronger. So it's something that we can leverage upon to solve a whole lot of these macroeconomic problems that they are facing. So that is why we should not spare any effort to ensure that we restore confidence in the oil and gas sector, so that the existing investors that are there, because unfortunately, many of the major investors have left because of insecurity, because of poor governance, and because of policy and regulatory challenges. Many of them have left. But we can still salvage the situation. So if we're able to move up, improve our oil production, the market is there. So it could be a game changer for us. And I think the government is doing a lot, to turn the situation around. We already have the Petroleum Industry Act, which is a major policy instrument to support, more investment in that sector. The government has stepped up the issue, tackling insecurity and all these illegal activities in the Niger Delta area, which is also a major step forward. But unfortunately, even as we speak, we are not able to meet our OPEC quota. So it could have a very, very significant positive impact if we're able to get it right, the crude oil. And from there, we can leverage on that to now develop other sectors, to develop our infrastructure, to diversify the economy. Because you need money to do all these things.
But
you need
Doctor,
foreign exchange to do these things.
Dr. Yusuf.
And the fastest way.
Dr. Yusuf, what if we shut the parallel markets to address speculations on the naira?
No, it's not possible to shut it down. How are you going to enforce that? No, you can't shut it down. I mean, if you shut them down, they just go underground. The only way to make them irrelevant is for us to be able to make the foreign exchange available at an exchange rate that we can support. That is it. If you know that if you walk into any bank, you get the foreign exchange at a given exchange rate, it could be 80, it could be 800, it could be 750, whatever it is. Let us come to a fair level of equilibrium where the gap between the parallel market and the official window will be as narrow as 5%. All over the world, they have parallel markets, but the margin is always very, very minimal. And the global standard for margin, that the difference between the parallel and the official window is just about 5%. What we had under the previous dispensation in CBN was almost 60%. Right.
Thank you so much, Dr. Yusuf.
What is imagined at this time is about 10%.
Thank you so much, Doctor. We're out of time. I've been speaking with the Chief Executive Officer of the Center for the Promotion of Private Enterprises, Dr. Muda Yusuf. Thank you so much, sir, for always finding time to join us on the program. We sincerely appreciate it. Thank you so much.
Thank you very much, Jumoke.